Hello, founders, investors. Welcome back to the show. I'm your host, Chris. Today we have very special guest, Jayla Siciliano, host of the Seed Money podcast. She just did this incredible series with a founder and an investor. And it was not just one episode, it was a couple. It was really, really good, really in depth, just straight to the point. I'm super excited to have you on, Jayla. Welcome to the show.
Thanks for having me. Good to be here.
How did you come up with that concept for that kind of interaction? Because to be honest, I brought that up to some founders and they're terrified. Like they don't want to get ripped to shreds by an investor in that live format. So how did you come up with that?
Yeah, I think, gosh, let me think back. I had a conversation with Shane Pope, who was the entrepreneur who was kind of threw himself in there, which props to him for doing that. And he was talking about which path he wanted to go down. And he was asking me for some introductions. And, I get asked for introductions all day long. And it's really hard to, one, make meaningful introductions when you've only met someone for 30 minutes, unless it happens to be this like perfect pairing. And, I protect my network. I've spent 25 years building up a network, so I'm not just throwing out introductions. But we kind of had this, he was a gaucho, he went to UCSB, that's where I went for school. And I said, you know what, let me see if I can pair you up with somebody in your space, because he's in the AI space, which I'm not in, and asked him if he would just want to do, a pitch on the podcast if I paired him up with someone. So it kind of started off with him looking, asking for introductions. And I just thought, okay, I can make some introductions, but let's make it beneficial for him and actually get feedback and also make it beneficial for the audience. So I think that's kind of how it came about.
And I love that approach because I get asked about those introductions as well. Since I started this podcast, it's endless. The amount of founders that
Yeah.
reach out on TikTok, on LinkedIn. Now when I go to events, it's insane. And I do
Yeah.
agree with the protecting the network thing. And I don't think a lot of founders think of it that way. They're like, well, you know him, so just introduce me. And it's like, well, I have to make sure you're the kind of person I can introduce first so I can avoid a lot of the chaos. Because if you're not a qualified founder and I introduce you, that brings my stock down a little bit. So it is a reputation thing as well. So I 100% agree with that.
Yeah. I literally just had a call, I think it was maybe a week and a half ago, got like a 30-minute pitch. This is like a really highly professional, person, extensive background, cool concept, product, venture they're launching, raising 500,000. But after 30 minutes of talking to them, going through their beautiful deck, still I couldn't articulate how they were going to make money and how somebody would get a return. And I'm like, how am I supposed to
Mm.
make an introduction if I can't get that? I don't want to waste someone else's hour to be able to get that information. So I think that piece just still is such a friction point for founders, not putting exactly what, even somebody, what investors want to hear. And even if, like, again, I'm not a tech person, I'm more consumer products, not AI, but I can't even make an introduction if I can't articulate what the opportunity is in a few sentences. You know what I mean?
Yes. And one of my questions to ask founders is business model. How are you going to be profitable? What's the game
Mm-hmm.
plan? And after asking over 100 founders in the past, like I would say 6 months, I realized that if they can't give me a really concise business model within like 30 seconds, they probably don't have one. Like
Yeah.
that's just the truth. And it's hard because you have to tell them, hey, this isn't going to work. Like you're not fundable yet. But I do think it's better for me to tell them than for them to hear from an investor. Because now it's like
Mm-hmm.
you've burned that contact. You
Yeah.
essentially burn that connection and you wasted that investor's time. So even if they do run into you again at an event or you connect on LinkedIn or whatever, you see one of their posts, they see one of your posts, they're kind of looking past you because you have to be fundable before you get to the investor chat. That is the biggest advice I give to founders.
Yeah. No, totally agree.
And so
100%.
I want to go down that list for you. I would love to hear that from you. Like, what are the key things you think a founder has to have for them to be fundable? And we could focus on just consumer or even keep it broad in general for all startups.
Yeah, I mean, I think it's for all startups, and I can tell you what it took me to be fundable. Like I started raising money and I didn't realize until probably a few months in that I had major gaps and no one was going to give me money. And I think that's what happens with a lot of founders. I do want to start off by saying I think there's so many posts and content. You need to do this, you need to do that before you start. But you learn, you get all this experience, you figure all this stuff out by starting. So you might waste a few connections. It is what it is. That's how you're going to get the feedback. So, I think the things that that founders are typically missing, a big one is team. Right. For me, I was brand new to that industry. I had no experience. I had no track record as an entrepreneur. So they want to see a couple things like who knows the industry, that's on your team, who's going to be managing the finances once we give you $1 million, right? It's like you got to have
Right.
somebody, even if it doesn't have to be a full-time person, but somebody needs to be looking at the cash flow and the books. And you want to show that forward thinking that you have somebody lined up to do that. Doesn't mean you have to be working with them then. So I think team is a big one. That was a big gap that I had, that I realized, and I had to go back out. I had to like pause fundraising, build the right team that was fundable, that investors could feel comfortable putting money into. So I think
Especially a
that's the big one.
pre-seed. I would say a
Totally.
pre-seed, that's
Yeah.
probably the first thing I hear from every investor. It's like, if we're investing in you and you have never raised capital, you haven't had an exit yet, if you're like a beginner in the startup game, they're looking at, okay, who else works with you? If it's just you,
Yeah.
you have to be brilliant. And
Yeah.
most people, you don't meet that brilliant mark, which is not a bad thing. But that's why having those people around you is going to be it's the thing that gets you over the hump to make everything easier. So I totally agree with you on that team part. And I say team is even more important than traction in the early stages. It's a
Yeah.
little controversial, but that's just the truth.
Yep. Yeah, I had no sales when I raised my first 500,000, not a single dollar in revenue, but I had letters of intent from huge retailers, reputable, proved there was interest and demand. So I think that's another one is, what's the real demand, proof of demand, and being able to articulate that. And then I think the biggest one that I see that feels so obvious is just raising more money than they can articulate actually a reason to need it. I started off saying I need $2 million out of the gate. I did not need $2 million. I ended up scaling that back down to doing like three tranches. The first one was $500,000 to prove out the concept, gain some local distribution. And so I think founders don't approach it from that standpoint of what amount of money will get you to the next milestone that will give you an increase in your valuation, because that's the amount of money you need to try to raise, not just this big hypothetical number that would be really sweet to have in the bank account. I think a lot of times it's like here's the number I should be raising, or I could do so much with $2 million. But really that granular like look at, if I had $100,000, I could hit this milestone, and that would make us that much more, that would actually give us some value. And then we could go raise a real 500,000, or if we just brought in 250 to hit this milestone, or if it's just 1 million, depending on what stage you're at and what industry you're in. And I'm talking all early, like I think you are focused on venture. So I'm talking really like pre-seed,
Yeah.
type funding where, you're at that early stage, because that's the hardest. Like once you've got revenue and traction, it can still be tough for sure. I know plenty of people with lots of traction that are struggling to raise money. But for those early stages, I think those are kind of the big ones that founders are missing.
I think something that's really funny is I think some founders, they wouldn't admit it, but they try to raise more than they need for personal expenses for their lifestyle.
Yeah.
Like, I don't think they want to admit it, but it's like they want to pay themselves a salary of whatever they're making at their past job sometimes, or sometimes twice as much. I've had some founders tell me kind of behind the scenes, and I'm just like, that's not a good idea, because a
Yeah.
good investor is going to be able to see right through that. Like, you don't need a salary of $250,000 a year. Like, you don't have to live on that. You can live comfortably without having that much money. You can make it happen, especially if you're trying to build this company. But I want to go back to something that you said of, when you brought it down and you got those letters of intent, how did you get the letters of intent? Because I try to tell founders that's one of the best traction strategies early on. Instead of chasing numbers and trying to run a bunch of ads or running in circles, it's best to go and get those LOIs. So, what was your process for getting those letters of intent?
I mean, so for me, it was talking to the food and beverage buyers at these big prestigious hotels and telling them, hey, here's where I'm at. I'm going out to raise money. Upon getting funding, would you be willing to give us a test, run and place orders? And got them to just sign a letter of intent to do that. There's no hard commitment, but it just showed that we have these like really cool, hip, big hotels that are seeing a need for what I'm creating. So I mean, it was as simple as that, just getting to the right person and making the ask.
That is genius. I'm not sure too many founders think of traction in that way. Something I've been focused on a
Mm.
lot with my content is trying to give founders different versions of traction instead of just revenue. Because revenue, I think we all would agree, is the best, but it's not the only form of traction. You know, what are some other traction strategies if you've seen work?
Yeah, that's a great point. I also had it was part team, part kind of marketing validation. So I had a alcohol product and I brought a food critic on and he was actually part of the team. So that's validation. That's traction that someone with that, level of palate and industry knowledge is willing to put their name behind the product. So I think there can be marketing traction. It could be like a major influencer or a major B2B partner who is just seeing the solution you're offering as being something they're interested in. It doesn't necessarily, to your point, have to be dollars. It could be, I think definitely could be a marketing partner.
Because I agree because I go to like the wait list. I think if you have a significant wait list size, that
Mhm.
says that people want it. They're lining up, they're giving their email. And if you charge them even a small fee, that's some cash. But then more importantly, you have more and more people on that list. And that just, it's so powerful versus going to an investor saying, hey, I have an idea. When you can say, hey, I have this idea and this is who wants this idea. I need your money to bring it to life. That's a totally different conversation.
Yeah. Yeah, I totally agree. I think for, more software tech related products, it is a lot easier. Like I physically was not able to sell the product until I had all this licensing and blah, blah, blah. And you have to have a physical product to produce. But for software and tech, I do think getting even some paying customers as trials or whatever, there's no reason you can't get that typically. I mean, there might be reasons like, well, we need to develop out the whole platform, but what is even one small element of the solution that could be offered, or will people prepay something like you said? So, yeah, I think getting as far as you possibly can with that potential customer and then being at the point like, I cannot get any further. I have gone as far as possible and cannot
Yes.
get any further without funding. That's where you need to get to.
Okay, so let me ask you this. I talk to a lot, pretty much every investor brings up personality of founders they invest in some way. You have to be coachable, you have to, have a lot of fight in you, all of those different things. From your perspective, what are some of those key personality traits a founder has to have to be fundable?
See, I kind of totally disagree with that. I have seen
Really?
all kinds of founders of every personality type. You have quiet behind the computer, type founders, and you can have really loud, obnoxious founders. And so I feel like personality trait is something that whatever your personality is, we can do a lot of things to, grow over time, but I'm not really like an extrovert person. I have learned to become extroverted over the years from doing all the business stuff in my career, but I'm not really an extroverted person. So I think that personality is one that you can be any type of founder. If you're not coachable, I don't know. And I think there's all kinds of investors. It depends on what your company is. You might find someone who's just like, oh my God, I see that exact opportunity. And yeah, I'll throw some money in. And the timing is perfect. Yes, I have some extra money right now. I need to do something with it. It's end of the year. Sure, I'll put it towards that. That sounds really cool. I like that. Emotionally excited about it. And they might not need to get to know the founder on a deep enough level to know if they're coachable. So I guess I say all that just to say that don't worry if you don't feel like your personality is not the founder type of personality, because I think if you're committed, that's the main thing. If you are committed, you will, and where there is a will, there is a way. You will figure out a way to get your company funded and off the ground and do whatever, your goal is. I think if you're looking for angel investors who are going to be heavily involved, and a lot of VCs too, yes, they want to see that you're coachable. Real
Yeah.
professional investors are probably going to want to see some traits like, personal commitment. How much have you invested? To your point about the 250,000 salary, if you're not willing to do this without a 250,000 salary, I don't know how committed you are, because there
Right.
has to be a little bit of sacrifice depending on what stage you're at. So I think commitment level is one, and I do think an element of being able to lead a team is important, but that doesn't mean you need to be this like overt team leader person. Like you can get people really excited about what you're doing without being that like, rally the troops kind of person. So anyway, I say that because I hate a lot of these posts because I felt like that. I felt like an outsider when I
Mm,
first started my company. I was like, I'm not this Silicon Valley like tech bro. Like, who am I to be starting a company? How am I going to raise money? I don't identify at all with your typical tech bro founder type personality.
yeah.
But I was determined to do it and figure it out. And I did. So I think, about the things that make your company fundable, and all the other stuff will kind of follow.
I have to agree because I don't know if you've seen the 996 thing from them
Yeah.
of like it's like essentially a nonstop work thing. Like I think it's you work
Yes.
9 hours or something like that. And I'm just like, look, man, I'm a single dad. Like I want to spend time with my kids. When I look back on my life, I don't want it to be like I just built companies and I work nonstop. I don't want to do that. I don't. And I think if you're better at managing your time and when you actually work, you're locked in and working, you can still get results. You don't need to work 18 hours every day. And then it's not healthy. Like it's so many downsides to that where you're just working nonstop. You don't work out, you don't eat well, you're not sleeping enough. So that part compounds and you don't see the consequences of that until 5 or 10 years later. And that is almost impossible to repair. So I do think part of the culture, I just don't think it's sustainable. Like a sprint like that sounds good, but if I meet an investor who expects me, because there are some that I've talked to who are like that, they want you to
Oh,
operate that
yeah.
way, and I'm just like, I wouldn't even advise a founder to do that. If you want to, okay, but I wouldn't do it, so I'm not going to tell you to do it. That's not healthy.
Yeah. So I will tell you, one of my more well known past investors had a thing. It was 24, 24, 24. Hire 24-year-olds, work them 24 hours a day, and they'll burn out after 24 months. But you get like a lot of workout. And this was years ago. I think the culture has shifted a bit. But yeah, that. And, to get slightly personal for a second, I felt like I had to do that. And I did that for 10 years. And my great grandmother died at 46 of a heart attack. I have heart disease in my family. And so I have made a really conscious effort in the last like 10 years I still own my own company. I still, work for myself, but to work less. And I'm kind of a workaholic. I think a lot of us are. Like, I love working. I would work,
Right?
I,
Yeah.
I do. And I love having kids because it forces me to stop working.
Yes.
But here I am. I have heart disease. I am on a very aggressive treatment to avoid stroke and heart attack. It's gnarly and I'm like in great shape, but I put my body through hell for probably, 12 years, killing myself for my company. And it is not healthy, and not enough people talk about it. And people do have
Mm.
heart attacks in their 50s and 40s, and it's not good. So I'm totally with you. I hope that culture shifts more and more in the right direction.
Yeah, yeah, I think it will. I think with the use of AI, this is where AI comes in, where I think it is helpful. Where, like for me myself as a founder, a lot of the things I would have had to hire somebody 4 or 5 years ago, I just have AI do it. Like co-work is incredible. It can get
Hmm.
expensive, but having tasks I know, one of my favorite tasks right now is I'm connecting with investors every week. So co-work literally goes through every week and finds different investors that are already in my network that I'm not connected to. I get 25 each week. It'll give me specific details on them, what they invested in most recently, and a little script to reach out to them. It
That's
is
incredible.
a it's incredible. So my lead generation for this show, that's the workflow right there.
That is
Works
amazing. Love that.
tremendously. Yeah, so
Yeah.
I think AI is going to be one of the things that founders have to leverage, especially for like building MVPs. Like there's no reason why today, if you're in not in consumer where you like if you're
Yeah.
trying to sell cookies, you got to make the cookie. Like in everything, pretty much a lot of other stuff, you can build something basic to get you started. Something bare bones in like a weekend and it could get you started. So I think AI is giving us that kind of leverage where starting a company now is just way different.
Yeah, totally. Oh my gosh. And there's just so many, even a lot of stuff I had to spend money on, 15 years ago, just yeah, it doesn't even exist now, even from like shipping, online shipping, licensing, all kinds of stuff. Everything has just gotten faster and easier, which is amazing. I think it's going to be interesting. I'm not really in like the venture space, I focus more on like angel funding for people, but I do think it's going to be interesting as startups need less and less human resources. They're going to need less and less, and they're going to have shorter timelines to get stuff done. I think it's going to be really interesting to see if this power dynamic flips or at least balances out a tiny bit between founders and investors. Because yeah, there's just a lot more they can do without a ton of funding.
I agree. Because I have some founders that come to me and they're like, oh, you know this investor, you had him on your show, introduce me. And I'm like, okay, well, let's go through the process and kind of my screening system, the fundability assessment on our platform Compass, completely free, by the way, founders. You can check it out in the description. And after that, that lets me know if they're fundable. Some founders go through and I'm like, like if you already have this much revenue and you're killing it, I don't know why you would want to go there now and get like, do you actually like need it, or do you just want it so you have kind of like some cushion? And some they honestly will say, yeah, we don't really need to raise anything. And I'm like, well, what are we doing? You just want this? They want it for the fame and the headlines and the attention, not necessarily for the actual cash. Like they want to be connected to this investor because that connection leads to other connections and makes something else easier, which I understand the logic kind of, but I'm seeing that already where some founders don't even need to raise capital. They're already cooking it up. They're making progress without funding. I'm just trying to get them to just go on that path, stay there. Don't get funding
Yeah.
because that could just throw you off.
Mm-hmm. Yeah, totally. Well, and yeah, speaking from experience, you get a bunch of money and you start, you lose your focus and you start going in different directions. And yeah, not always the smartest move. Staying focused and lean can help you out.
Okay, before we go, I want to get a little more personal with you because I love talking to the founders who have raised capital, who've kind of been through the fire, so to speak, because a lot of my listeners are founders who want to go through that process and raise capital. What are the pros and cons? Let's just say the biggest pro, the biggest advantage you had, and then one of the cons, one of the things you really didn't like about the process.
Yeah, so I started a company where I raised money, had to raise money to get off the ground, and then my current company, and I sold half of it last year, the East Coast side of it. I bootstrapped, put my own money in, which I always say like people say bootstrapped and it's like, well, there's usually money coming from somewhere to start it, right? And with my first company, I didn't have enough money to put in to bootstrap it. I had to get investors. So I think the good thing about investors, they gave me the opportunity to see through that vision that I had, for creating this product and carving out this category in the market. I would not have been able to do that without investors. The downside is that so I had a corporate job for 7 years. I had this idea for a product. I quit like the dream job to go start this company. Two reasons I wanted to do it. One, my dad always had his own company. He was always on vacation. He ate lunch with us. He had a really flexible schedule. And I saw that, and I was in this corporate job, and I'm like, I don't want to do this corporate thing forever. This is like 2 weeks vacation. Like, that is not enough. I want to do kind of what my dad did. So I was like, and then simultaneously I had an idea for a product. So I quit thinking I was going to this like place that was going to give me more freedom and time and flexibility. And then I raised money and I'm like, oh, wow, now I just have like four, I have a board that I'm reporting to, not just one boss. And holy shit, I feel a lot more pressure than I did at my corporate job to execute and work 24 hours a day and sacrifice. And oh, guess what? Now I'm putting everything back into the company and I'm not even paying myself, which I don't recommend. So, the downside is that it depends on why you're doing it. If you have a, product that you just cannot imagine not creating this product and you need investors to do it, then go for it, do it. But if you're leaving a job or if you're starting a company to get time freedom and to make money or to grow your wealth, there are so many other ways to do that than starting a company that requires raising money from investors. There are all kinds of businesses you can start cash flowing a lot faster and bootstrapping, or see if you have a model within your product that would allow you to bootstrap, because
Yes.
then you do have your own flexibility. And the other thing is I ended up doing a lot of things in my company that spread ourselves too thin, that were kind of suggestions of our investors, because our goal was grow, grow, grow at all costs. Versus with my own company now, it's been like, I grow when I want to grow. Sprint to grow, on the months when it makes sense for me to do that. I take summers off when my son's out of school and we travel and do fun stuff. So I think the downside, it depends on why you're doing it. If you're doing it for reasons to just grow, 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 and that's your vision and that's what you want to do, then I'd say investors are great because you need that, fuel on the fire. But if your goal is to, get flexibility and time freedom and not have a boss and all those things, you probably don't want to raise money. And you should really take a hard look at what you can do to bootstrap, because it's an easier path from that. Neither is easy, but again, just choose the one that aligns with your personal goals.
Love that breakdown. I think some founders need a reality check from people who've been through the fire, because then you kind of see that it's not all perfect. It's not always perfect, because sometimes it just doesn't work. It's not the best. So, man, I appreciate you being here, sharing this, and giving us some insight into your background and all of that stuff. Please tell people more about the show, the Seed Money podcast, because I love it. I've been tuning in. I like watching on YouTube. Guys, this podcast is amazing, but I'll let Jayla tell you about it.
Yeah, thank you. Yeah. So over the years, I've had founders continue to ask me, how do I raise money? How do I start a company? How do I get started? And I've always had a soft spot for consumer products. That's the, industry I've been in for years and years, started in. And it's a lot harder to raise money for consumer products than it is tech and software. There's a lot more variables, harder to be profitable, all that good stuff. And so I got my current companies more in hospitality and real estate, and started investing in real estate. And it was really lucrative, but I'm not, doing anything to help the world. So I started the podcast 2 years ago, focused on helping early stage founders raise their first round of angel funding. So just to make them realize that option is out there. And I also wasted months and months pitching VC firms when I was way too early for that. So one of my goals is to just educate founders on, pitch the right investors for the stage that you're at, and don't waste time pitching people who are just not even close to, being at the
Yeah.
right stage, or being at the, at the round that you're at. So,
Yeah, because it's I see both sides of it, man. Talking to investors and founders for me has been so interesting because I get to like it's weird. It's like being in the middle of a war of two countries, and I get to go to both sides and talk to both sides
yeah.
all the time, and I get to just gather so much information. It's mind blowing because I immediately can hear what investors say and process it and translate it to what founders need to know. And then even with founders now, some of the things that they care about, where the quality founders are, that real signal, I can translate that to investors. And I think that's why content is so good. So shout out to you for doing the show. I love it. Jayla, again, thank you for being here. This was absolutely amazing.
Yay. Thanks for having me. Are you in LA? I just was going to ask you.
I'm from LA. I live in
Okay.
Seattle now, and I'm in Portland
Oh,
all the
nice.
time. So I'm like
Yeah.
all over the West Coast nonstop.
Oh, very cool. Yeah. I'm in Santa Barbara. So just saw your hat. Had to ask. Love it. Thanks for having me. This was a lot of fun.